for joining us. This is Business Morning on Channels Television. I am Bisi Adebayo. We'll begin today's program with a warning from the International Energy Agency that the coronavirus pandemic has paved the way for the largest decline of global energy investment in history, with spending set to plummet in every major sector this year. In the group's annual World Energy Investment Report published on Wednesday, the IEA says the unparalleled decline in worldwide energy investment had been staggering in both its scale and swiftness. It warns that the economic impacts of the public health crisis should have serious implications for energy security and clean energy transitions. The IEA says the slowdown in spending on key clean energy technologies also risks undermining the much-needed transition to more resilient and sustainable energy systems. Meanwhile, oil prices are down today on revived concerns over how quickly fuel demand will recover, even as coronavirus lockdowns begin to ease in many countries, while U.S.-China tensions added to negative sentiment. Brent crude futures fell 1.69% in early trade to $35.56 a barrel, while U.S. WTI crude futures went down 1.6% at $33.83 a barrel. Now, OPEC Plus members are cutting their output by nearly 10 million barrels per day in May to June to buttress prices as measures to rein in the coronavirus pandemic have slashed fuel demand. And back home now, the GDP data released on Monday by the National Bureau of Statistics shows the trade sector contributed $5.37 billion to the nation's GDP in the first quarter of 2020. In real terms, the sector contributed 16.08% to the GDP, but contracted by 2.82% year-on-year from a negative of 0.58% in the fourth quarter of 2019. Now, the performance of the sector continued the negative trend observed since 2019, contributing to slower growth in the non-oil sector as the quarter-on-quarter growth narrowed at a negative of 13.79%. And to dissect the trade sector with me now is Mr. Ojikutu Adeli, who's the president of Computer and Allied Products Dealers Association of Nigeria. Good morning, Mr. Ojikutu. Thanks for coming on the program.
Thank you for having me. Good morning.
Now, the GDP data for the first quarter shows a decline in the trade sector. What are some of the factors that could be responsible for the weak performance?
Basically, considering the pace at which we started 2020, amidst a lot of, political and uncertainty, really, it actually affected the trade sector from the fact that the majority of those things that are imported in Nigeria that are traded in terms of commodity, product, finish, and what have you, from different sectors, from ICT to a lot of clothing and a lot of other sectors like that. Finished products as well, in terms of food production, crop production, and what have you, comes from China. So, and the coronavirus issue started in November, December. So, the importation, bringing things into Nigeria, started slowing down from December, but it was not noticed. So basically, why it affected the first quarter is because the rate at which people were ordering have been slowed down. So it is those things that comes in either as raw materials or as finished products that are traded. So automatically, it affected the trading, the way products and goods exchanged hands in the first quarter of 2020, basically. That is the major cause.
Now, you're in the business of trading, and of course you represent an important segment of the trade in Lagos. That's the Computer Village, and of course you've given us a description of, how it has affected you. But can you give us, since the virus broke out in Nigeria with the lockdown and all, can you tell us how exactly this has impacted your business?
Majorly, you observe that the product that are already in stock, when the presidential directive came, that no commercial flights to come into Nigeria unless emergency, permissions were given. And majorly, what we sell, mobile phones, computers, projecting equipment, cameras, and what have you, are basically products that are finished from abroad, China, America, Europe, and, that are brought into Nigeria and are being traded. So stocks were not coming in. Products were not coming in. So people were left with what they have in their stores. So you now discover that things were sold, some brands of mobile phones that were sold for around 400,000. They were the premium brand. Went up as high as 650,000, even during COVID.
But why are they going up if they already had them in store?
The law of demand and supply. The law of demand and supply. So when the products are not coming in because no commercial flights were coming into Nigeria, or cargo planes or whatever, that means that people are left with what they have. So everybody was holding on and demands were coming in. You now wonder, during COVID, how are people getting money to other products? But the truth is, people are doing birthday, people are doing a lot of events, people want to, and that's the issue of Zoom classes and, Zoom conferences. Everybody wants to, even your programs, you were doing them on, via Skype and all that. So everybody needed an equipment, telecom equipment, mobile phones, laptops, and what have you, to do their daily work, and children were using for classes. So people were demanding more while the stocks are not, increasing. So all the stocks that people had, automatically the law of demand and supply made people started jacking their prices. And again, during the COVID period, dollar went up for as far as 430, 435, from 360 naira to $1 to 430, 435. Now, what happened basically was people have the fear of ability to replace the stock that they were selling. So they are calculating the prices at which they are going to have their reorder, points. So when you buy at 360 to $1, you are selling a product for 100,000, for instance. If you are buying at 430 naira to $1, you probably want to jack that product. So you won't sell at that buying price or selling price that you had before. You will jack up to the present reordering time or the reordering value. So that was why the prices were going up. And when prices goes up, the quantity demanded will reduce. So, but you can sell at higher price, basically.
But what's the state of importation now of these products? Are you able to import them now?
There is a window. We thank, the government for opening the window to buy their cargo. Cargo things are coming in. Basically, things are not coming in from China, but people can route their products through Dubai, UAE, onto Nigeria. And this is, bringing the prices to a stability level at this time.
And it's good you've talked about government now. Are there any specific actions or policies that you would like to see from government to support traders?
Basically, there are a lot. And I want to say this, that as it is, when you look at China, when you look at the US, the SMEs, that's small and medium entrepreneurs or enterprises, these are the large volumes of the, economic sector that would automatically not just create employment for themselves, create employment for others, and produce products at their own level. The era of big conglomerates is, fading away, even in developed nations. And we are getting there. You see people now start their own businesses, register their own businesses, fast, and want to start producing something from local makeup to local creams to food production to syrup productions to even software production. So now what government needs to do for this set of people that have the boldness not to look for jobs but to create their own enterprise is basically ambience. For places like Computer Village, Ladipo Market, Alaba Market, and other markets around Nigeria, Aba Market, Arara Market, and Beirut Market in Kano, these are places that people's ingenuity, most of these places are not government built. They are people's ingenuity that brought them to bear. And what happens basically is that when these places are established by people's coming together to establish a hub, government needs to create an ambience. When you look at some of these markets, they look like slum, I'm sorry to say, because there is no proper government. I mean the federal, the state, and the local. There are no proper cut-off plan to say The way that we can generate revenue, the way that we can develop our economy is through this sector. Big companies will declare losses, but SMEs will still turn in something because of their trading activities, and they are ready to support the government by paying and, develop in the economy in their own way. Government should create ambience, road infrastructures. We don't want to come up with pictures. Road infrastructure, telecom, network, in terms of government providing free internet for some of these ops. Power. They were doing something when they were doing maybe Empower or Trader Money, the vice president was doing, they did at Surah Market. These are things that they are supposed to do in ops like Computer Village. They are supposed to do all across that. There must be 24-hour power. It would amaze you when you go to some of these markets and you see I better pass my neighbor generator as much as 100 in front of a building, wired in a very funny way. It shouldn't happen in this kind of time, in 21st century. Government should take ownership in terms of development of these ops. And I tell you, that is the solution to Nigerian underdevelopment, to Nigerian economic downturn, to economic growth for our nation. Basically, if these ops, by the time they provide these infrastructures, it would jack up their revenue, jack up their resources. Government will have revenue even from them, because a small company will grow to a medium-class company or enterprise, and medium enterprise will grow to large enterprise, because there is, ambience, there is development. Some people say capital. Government should give loans. The procedure at which we give loans to SMEs should be less cumbersome. Not that they say you should go and bring your grandma to get loans and all that. No. Government should try as much as possible. Bank of Industry, Agric Bank. There should be an ICT bank. ICT is the bane of any development anywhere in the world, if we are serious. So anybody that have an innovation, I think Lagos State government did something like that they set, some funds out for innovators. Federal government should do, state government should do, local government should do. Ability to be able to develop solutions to solve local problems within our communities, so that people will innovate, government will take ownership, will support them. And I tell you, when we do all this, we will not just have developed those individuals, we will have developed their enterprise, their ideas, and they will employ people. And when there are enough employment, there will be less money to be spent on insecurity in the country, and that money that you are supposed to be spending using to buy patrol vehicles and all that, you can divert them to other developments. And with that, I think will be a better, nation, and the economy will automatically grow itself.
Now, let's talk about concerns that have been raised about the fact that foreigners are taking over the business of trading in some areas. What's your experience like at the Computer Village, for instance?
Sincerely, we have not been able to define as a nation what we want about FDI and business development. How do I mean? Foreign direct investments. If you want foreign direct investment, every country wants that. But how do you regulate? How do you protect your local players? If you go to other countries, I don't want to mention names, I want to assure you that there is what's called protectionism for the local, players, local traders. Let me tell you what happens in Nigeria today, and it will amaze you. A company that is in China, that is a manufacturer, would automatically register another company under this guy as an wholesale company in Nigeria, maybe bringing one Nigerian as a partner, or a director. Then after registering this, they would now have a retail outlet registered as well. So now this manufacturer will be in China, will have a registered company saying they are buying in bulk under another name, the same company, the same ownership when you investigate them. Now, they will now have retail outlets across Nigerian cities. They will have in Umuahia, they will have in Egbeda, they will have in they will have in Agoiwoye, they will have in Kano, they will have in Calabar. In all the cities, competing with that woman that has a show glass, buying from the same company that is owned by them as an wholesale company selling, and they will have a shop in front of that woman. So how do we protect our women? How do we protect our young ones? How do we protect our young small businesses? You know, in Nigeria, 1962 or thereabout, or 1976 or thereabout, there was what is called indigenization, you know, that's law that was done to protect local production, local sellers and all that. We might not go back there. But even when you look at the theory of globalization, you look at what is happening in the US, whereby President Trump is readdressing some of the agreements and the trades, you know, that they have. So there is nowhere in the world that you say there is globalization, and globalization without barriers is not possible, most especially to us as a developed country. We should try as much as possible to do this liberalization, the globalization that we have, foreign investment, direct investment that we want. We should do it with very, you know, high level of protectionism to our own people. If not, all these monies that are made, I don't want to mention countries because Nigeria is a friendly country to other investors, to other, you know, nationals. But at the same time, they should understand that they should follow the laws. There are companies that, if you want us, we mention to the government, that are doing this, you know, funny practices.
I was going to ask, has your association, for instance, actually mentioned to the government that
we've written to government agencies, we've written to National Assembly. We have our copies of things that we have written, calling the government's attention.
Has there been any response to any of your letters?
There was an investigation from NCC. You know, NCC came to do their investigation. The report, we are not sure, maybe because of change of government, but they should still look. We are calling out NCC, you know, have a close relationship with our association, you know, but at the same time, this protectionism is not just basically because we are here as business people. Even in other sectors, foreign companies that are manufacturers, OEMs, original equipment manufacturers, cannot be competing with that woman that has a show glass somewhere in any city in Nigeria. It's not done.
But
it's
we
not
also
done
want
anywhere.
to attract foreign investments into the country.
But that is what we're saying. Even US, they just entered a renegotiation deal with China this year, February 2020. Why can't they, for the fact that they know they have the largest economy, why are they renegotiating trade agreements? Why are they renegotiating? So the truth of the matter is, no country, you know, because you want foreign direct investment, allow people to be planting vegetable. Foreign investors planting vegetable, competing with that woman, or foreign direct investment, not doing what they are supposed to do are basically large projects. Not that they will have, you know, they will be on top, in the middle, and the low player. So at the end of the day, when they do this, they will be killing people. They will be causing, instead of them solving problem, they will be causing more problem in terms of unemployment to our people, which is not acceptable to us as, you know, players in the industry and generally across Nigeria. Something we should discourage.
Mr. Ojikutu Adeni, President of Computer and Allied Products Dealers Association of Nigeria, many thanks for coming on the program.
Thank you for having me. Thank you.
We're still drilling down on the NBS data, but from the financial markets perspective, when we return in just a moment. Please stay with us. Welcome back. Now let's get the perspective of the financial markets about the first quarter 2020 GDP and capital importation data. And I have with me the Chief Executive of Afrinvest Securities, Ayodele Ebo, to further analyze the numbers. Good morning, Mr. Ebo. Thanks for coming on the program. Well, let's start off with the capital importation report data, which comes as a huge surprise. Of course, $5.85 billion in the first quarter compared to $3.8 billion in Q4 2019. What do you actually make of these numbers?
Yeah, what we need to first look at is in terms of the comparison. So on a year-on-year basis, looking at Q1 2019, you will discover that there was a decrease, but on a quarter-on-quarter basis, that's on Q4, comparing it to Q4 2019. And when you look at, in terms of the yield environment, because when you dissect the figure, you still see that there's heavy reliance, close to 80%, on foreign portfolio investment. Q1 2019 yields on treasury bills, short-term instruments, were still as high as 17–18%. So we saw significant inflow from foreign investors within that period. Coming to Q4 2019, that was the period where we had the segmentation of the Nigerian treasury bills market. There were a lot of uncertainties within the space within that period. So we saw significant decline. Yes, yields were still a bit attractive, but because of the perceived illiquidity of the HOMO market, where the foreign investors were allowed to play, we saw that resulted to the decline that we saw within that particular period. And coming to Q1, which is the Q1 2020, the CBN tried to provided some form of comfort that there will be like the counterparty to provide liquidity for the HOMO market. So we saw that significant inflow in Q1 2020. You would look at, if you check the average liquidity in the I&E window was as high as $458 million then. So that's the provided some form of comfort. And looking at the equities too within that period, you discover that year to date in January was as high as, I think, 7.5%. We saw significant inflow also into that market. So when you're comparing, looking at the data, one, we need to still recognize that it's the heavy reliance on foreign portfolio investment, about 80%. And you also discover that Q1 2020, based on last year yields was higher, and that attracted a lot of interest. And comparing it to last quarter, because of some of the policies of the CBN, that reduced the participation of foreign investors.
Now, we've talked about the huge contribution of portfolio investments now, but how proportional is investment repatriation from the country?
Yeah, when you look at looking at the data in Q1 2020, we saw significant sell-off in the fixed income market, which wasn't peculiar to Nigeria, across emerging markets on the back of the COVID-19 pandemic. Yeah, but for most of the fund managers, the foreign investors, it's also a yield game. The FMDQ FX futures market has continued to provide some form of hedging for most of the investors. So the risk of foreign exchange losses would take care of that. But the only concern they had then was liquidity. Will CBN be able to supply when they want to exit, and they will be able to supply to the I&E window? That was the major challenge. So in terms of repatriation, yes, we saw significant repatriation, but this report captured just only what is coming in, capital importation. So did not capture in terms of the outflow. But if you look at, for looking at the Nigerian Stock Exchange, the FPI data, you see that there's significant outflow. I think about 150 billion, if you had for January, February, March, was significant compared to the inflow we had on the Nigerian Stock Exchange. So in terms of capital repatriation, yeah, we saw that, but currently liquidity within the investors and exporters window has reduced. That's thinned down from the high of close to average of $400 million. Currently, I think for May is around $35 million. That's very, very low. So, and there's been a lot of pent-up demand that the CBN have not been able to meet. Yes, we've been hearing a lot of, in terms of providing confidence that they will supply. But we feel that something needs to be done quickly regarding that.
Now, let's talk about the financial services sector's contribution. Now, of course, we saw about $3 billion from the bank specifically. What could have informed such an increase?
For the financial sector, yeah, you would notice that within the financial sector space, it's still money market instrument. It's the major instrument within that space. So based on the overall contribution of 70% to total capital importation, the financial sector will enjoy that major part of it because those instruments are trading within that particular space.
Now, in terms of FDI, now one would have thought that the Dangote refinery construction would constitute an increase to that sector, but what could have happened? Because that wasn't the case.
Yes, for the FDI, you would if you do like a 5-year trend analysis on the FDI data, you will discover the consistent decline. And we feel that the government is not paying more attention to that. If you check in terms of neighboring countries, in terms of the regarding the FDI, rather, foreign direct investment that they attract, very significant, multiples, even Ghana as high as $20 billion. But for Nigeria to attract just about $241 million, that's really very small. And if we cannot grow that, then we shouldn't expect any meaningful growth. We need to be able to review in terms of policy around why are the foreign direct investors, why do they prefer to invest in neighboring countries than in Nigeria? The market is here, over 200 million people. The market is there, and from any rational investor wants to site its manufacturing industry close to the market, proximity to market is critical so that they can also be able to take advantage of cost. But because of some of the bottlenecks in terms of policy inconsistency, insecurity, those things, government needs to provide comfort regarding that. And for us to be able to grow, and even for the CBN, if we continue to rely on FPI, there will continue to be pressure on the CBN because most of those funds are short-term. They will always withdraw them. But if you have FDI, that would stay for a while, and that would even help provide confidence. It will also generate employment, and that would boost in terms of standard of living and productivity of the Nigeria economy.
But with crude oil prices now back up at around $35 a barrel, how optimistic are you about foreign inflows into the country in the near future?
In terms of good crude oil prices going up, positive for Nigeria in terms of revenue. But in terms of investment, because we still know capital importation is still based on foreign portfolio investments. So what will attract them now will be yield. So if you look at the Treasury bills market, which is currently segmented, Homo bills is around single-digit rates. For the CBN to attract significant inflow within that space, they need to take that yield back to its previous level, which is double digits, to attract enough foreign portfolio investors. But what would also be scaring away investors currently is the illiquidity at the importer and I&E window that most of the foreign investors are not able to pull out their funds. If you recall, look at the FMDQ FX futures market is NDF, non-deliverable forward. So what they get is the Naira difference, but they still need to go and source for their dollars. And now, if that liquidity of sourcing for the dollars is not there, it means what they're after is the ability to take out their funds at their will. So if they want to take out their funds and they can't achieve that, that would be sending a very negative signal to potential investors that will bring their funds. Because what you look at in the last 1-2 months, for most of the activity that we're also seeing are funds that have been trapped. So rather than continue to wait for the CBN, some of them deployed those funds to the equities market, deployed those funds to the Homo market just buy time, pending when CBN is ready to supply dollars.
There are indications now that the federal government will sell off some assets. How is that likely to shape capital importation for Nigeria?
Yeah, in terms of selling those assets, because of still that policy inconsistency, for some of the foreign direct investors that would have come to maybe take a stake or buy a bit of the holdings from the government, may not be too comfortable with that. We've had scenarios where you invest in companies, another government comes in, they withdraw that contract, and you can lose your funds. So if we don't provide enough confidence for foreign investors in terms of enforcement of contracts, most contracts should be able to live beyond the government, and we need to be able to provide stability. We will hear, like there are some rumors around the privatization, power sector privatization. Those rumors shouldn't even be coming up in terms of reversing the privatization. It sends a very wrong signal even to potential investors when they are trying to look at Nigeria. So if we need to attract, the government wants to attract foreign direct investment. If you analyze the foreign direct investment portion, about 80% is equities, which we feel that for most of the tech companies that have attracted investment rather through the private equity guys or the venture capitalists are the major parts that accounted for that. But if we we don't provide confidence, then it may be difficult for government to attract foreign inflow to take in some of those stakes, because they also need that. They need that to create more revenue. When you look at the budget deficit, estimated about 5.2 trillion. But when you look at based on actual performance, based on past period, you will know that that deficit is as high as 7 trillion naira if we want to look at based on actual performance. So government needs to be able to raise revenue. Domestic investors, they don't also even have confidence in terms of investing in government because of that policy inconsistency. So if we don't address that main issue, then attracting investments for government parastatals may be very challenging.
Now, we need to wrap up this conversation very quickly, but let's talk about the GDP figures now. There's an argument that the GDP was calculated based on Q1 2019 and Q1 2020, and that, of course, limited the effect of the pandemic on the GDP. But if it had been calculated based on Q4 2019 to the first quarter of 2020, the true picture of the effect would have been reflected. Now, on what side of the divide are you on?
No, I think what we need to first understand, there's a quarter-on-quarter analysis and also a year-on-year analysis. So when the National Bureau of Statistics is comparing to previous quarter, that's a year-on-year, which you look at based on that data. But when you are comparing, we are doing a quarter-on-quarter, that's the preceding quarter. You are doing a quarter-on-quarter analysis based on Q4 2019. So I don't feel that there's anything wrong, because you see the data, they give you the figure for the quarter-on-quarter, they give you the figure for the year-on-year. For the last quarter, we grew by 2.55%, and this quarter we grew by 1.87% year-on-year. If you want to calculate your quarter-on-quarter data, you have the real GDP data, you have the nominal GDP data. You can arrive on your you can arrive at the growth of your quarter-on-quarter analysis. So I feel there's really nothing wrong in terms of the calculation of the GDP data.
Chief Executive of Afri-Invest Securities, Ayodeji Ebo, thanks for coming on Business Morning.
Thanks for having me.
It's time now for our market review with Edidiong Nwang. Good morning, Eddie. Before we get to Edidiong, let's do a recap of the warning from the International Energy Agency that the coronavirus pandemic has actually paved the way for the largest decline of global energy investment in history, with spending set to plummet in every major sector this year. In the group's annual World Energy Investment Report published on Wednesday, the IEA says the unparalleled decline in world energy investment had been staggering in both its scale and swiftness, and it warns that the economic impact of the public health crisis could have serious implications for the energy security and the clean energy transitions. And the IEA says that the slowdown in spending on key clean energy technologies also risk undermining the much-needed transition to more resilient and sustainable energy systems. Let's also talk about oil prices now. They are actually down today on revived concerns about how quickly fuel demand will recover, even as coronavirus lockdown begins to ease in many countries, while U.S.-China tensions added to negative sentiment. Now, Brent crude futures fell 1.69% in early trade. We saw it at $35.56 a barrel, and U.S. WTI crude futures were down 1.6% at $33.83 a barrel. Now, OPEC Plus members are cutting their output by nearly 10 million barrels per day in May to June, and that's to buttress prices as measures to rein in the coronavirus pandemic have slashed fuel demand. Edidiong Nwang is ready for us to review last week's numbers, even as the markets reopen today after the public holidays. Good morning, Eddie.
Good morning, BC.
Now let's
Well,
have the numbers straight from you.
Okay, so the Nigerian stock market jumped 5.56% last week. And just like that, we're back to the 25,000 level with the equity cap at 13.136 trillion naira. It was a broad-based performance as the rise in crude prices continued to support broader market performance. The exchange saw gains in all the trading sessions last week, and that brought the year-to-date return to minus 6.10% from minus 11.70% the previous week. A total turnover of 1.71 billion shares worth 18.84 billion naira were traded in 26,367 deals. Now, market breadth also closed positive last week as 53 gainers were recorded compared to 8 losers during the week. Now, all the sectors we track were positive yesterday, with industrial goods gaining the most by a whopping 15.45%. And that was due to gains from industrial goods giants Dangote Cement and Boa Cement. The banking sector is next. It was up by 7.24% as most lenders posted gains during the week. Oil and gas. Now, we saw some more activity on that counter last week. Of course, that's due to the rise in oil prices, and it was also largely due to the 20.9% weekly increase on 11 PLC, while insurance and consumer goods, gained 2.02% and 0.89%. Well, we have just 3 trading sessions for the week, and then today we're most likely to see bargain hunting or profit taking, I beg your pardon, as investors cash out on the gains recorded last week. But let's talk to David Adonri, a stockbroker at High Cap Securities, for more. Good morning, David. Thank you for joining us on the program.
Thank you. It's my pleasure being with you.
So with just 3 trading sessions left for the week, what should we be expecting to see in the market?
You have actually said it, that there's likely going to be bargain hunting for the remaining part of the week. I think that the remaining trading days in the week will be essentially a buyer's market because, number one, the activities in the market are likely to tone down since a lot of people may not have come out of the holiday mood. And last week was very, very vibrant. Last week, the market galloped appreciably. And so a lot of investors, especially short-term investors, are likely to see that opportunity to exit and make some profit. So for the rest of the week, I expect the market to tone down a little bit and probably be a buyer's market more than a seller's market.
We understand that 4 companies were fined by the NSE. Can you confirm that? And what do you know about those companies?
Yeah, those companies, I'm surprised because some of them are actually performing very well. Of the 4 companies, Ella Lake, Thomas Wyatt, Grief. I am very surprised that Grief is one of the companies that has been sanctioned for contravening the post-listing requirement relating to late filing of the returns. I cannot give excuses for the contravention, but I just hope that this coronavirus crisis did not contribute to the late filing. It's probably possible that the offense was committed before the onset of the coronavirus. But notwithstanding, the capital market takes exceptionally seriously the contravention of this nature because, investors rely on disclosures from listed companies to make their investment or divestment decisions. And so if the information is not passed to the investing public at the appropriate time, then the ability of investors to come to rational investment or divestment decisions becomes hampered. And so that is why perhaps this sanction has been slammed on these companies. I only hope that very shortly they will regularize their positions so that the sanctions will be lifted.
Thank you, Mr. David Adori, for your input on the program.
It's a great pleasure.
Well, there you have it, BC. Profit taking is expected in the market this week.
We'll see how that goes, Eddie. Thanks for those updates. We'll take a trip to London and the debt and currencies markets when we return in just a moment. Please stay with us. Time now to visit London, where Juliana Olayinka is standing by for today's market headlines. Good morning, Juliana. It's good to see you. Now, Boris Johnson will be questioned by senior MPs later today amid continued calls for his top advisor to resign. Will this not be a distraction from the fight against COVID-19?
Cummings, he's very senior aide, is right at the centre of the COVID-19 and the government response, and whether or not there's enough transparency and whether or not Boris Johnson's cabinet can indeed be trusted to handle the pandemic. Of course, this Dominic Cummings row comes amidst him taking two trips, one 250 miles away to his parents' house, another 50 miles away to a beauty spot at Bernard Castle, and he isn't the only individual within the cabinet that's been charged with doing so. There are several other individuals that have also been caught flouting the law, as some would say. And I think today is going to be a particularly tough day for the Prime Minister, because this is the first time that he will be facing the Labour opposition leader, Sir Keir Starmer, and will also have a barrage of questions from MPs, albeit remotely, about this situation. We still have the second highest death rate in the world. There are certain areas of how we're going to ease the lockdown that haven't yet been fully understood. So Prime Minister Boris Johnson is under a lot of pressure. Dominic Cummings, his chief aide, is hoping to think that this only affects the Westminster bubble, that outside of the Westminster bubble, nobody really cares. But of course, we've seen some figures from latest polls suggesting that actually the public do care, and it shouldn't be one rule for the elite and another rule for the masses.
The Bank of England chief economist makes a U-turn to say that UK recession may not be as bad as feared. What has Andy Holden seen differently this time?
What Holden has seen is the flash PMI data which we had last week, and it did show that there is some sort of recovery. The Bank of England, as well as the Chancellor of the Exchequer, Rishi Sunak, they both suggested that in Q2 GDP could fall as much as 25%, which is almost unheard of, and it would be the worst recession that Britain has faced in hundreds of years. But that flash PMI did show that there is some optimism, there is an uptick, there is some sentiment coming back in construction and manufacturing. Of course, now we've heard from the Prime Minister, and he has asked non-essential businesses to open on the 15th of June, so more people will be spending again. So Howding was giving a speech at a webinar hosted by the Confederation of British Industry yesterday, and he said, looking at the data that we're seeing in real time, it doesn't appear that it will be as bad as people had expected. Of course, in March, there was a fall in GDP by 5.8%. So it's good news. It's a U-turn. Governments and banks do U-turns. If it's a good thing, then it's good news. So yes, I think the markets were pretty happy with his sentiment.
I'm sure some good news would do at this time. In other news, Juliana, the UK government has proposed delaying the UN Climate Change Conference COP26 by a year. Is it all about COVID-19?
Of course, it's all about COVID-19. Everything at the moment, I'm afraid, Bissy, is all about COVID-19, and particularly with a gathering like COP26. If you remember in 2015, when there was a Paris Climate Accord, not only did it have heads of state, government leaders, captains of industry, it was a mass gathering. And with climate change and the whole climate emergency, there are so many differing opinions. I don't think it's something you can necessarily have over Zoom or any of those other social networks where people are discussing or having their meetings. So the UN's body that's working on COP26, they will be meeting today. The British government have already issued a date, which I believe is between the 1st and the 12th of November next year for them to have the gathering, and the UN will make up their minds. Also, as well, on the downside of COVID-19, all of the world's governments are dealing with the COVID pandemic and how the fallout is affecting their economy. And so I do believe it will be very, very difficult for them to make any economic suggestions or plans during the time it was supposed to take place, which is November this year, if they haven't seen the full picture of how they're likely to recover from the consequences of coronavirus.
Thank you, Juliana. See you again at 1:30.
Thank you.
Well, let's bring things back home now to the debt and currencies market, and we'll be speaking with a fixed income dealer at GT Bank, Chioma Udu. Good morning, Chioma. Welcome back from the holidays. Now, give us an overview of last week's activities at the market.
Okay, good morning, BC. Thank you for having me. I'll start with the fixed income market. The market remained quiet with pockets of trade, mainly on the bond space because of the bond auction we had. Most of the activities were tilted towards the short end of the bond curve, where we saw more of the bullish buyers because of the liquidity we also have in the system. Opening on Friday, the liquidity in the system was of over 800 billion, but we had a retail auction, and then we had bond settlement, so it took out a little liquidity from the system, leaving the money market to trade at 13 and up to 15 at the OBB and overnight. For the T-bills curve, the market was quiet with pockets of trades here and there, basically.
There are almost maturities of 308 billion naira this week. How do you see that supporting demand across the debt markets this week?
Well, we expect that. Okay, let me start from this month. The central bank has not had any more auction in which there was a sale. So we expect that even if they come tomorrow, we're going to see little sale. Most of the liquidity coming to the system tomorrow, we expect that the DMO will take advantage of the liquidity in the system tomorrow and, offer and take more than they are going to offer at the auction today. Remember, we have the PMA auction today, 59 billion on offer. So we expect that with the trend of the DMO, which they continue to take up more than the offer, they expect that they're going to do that today. And for the PMA today, 59 billion on offer, we expect the rates are going to remain at where they are, or slightly tilt towards 4%.
The Treasury bills market closed last week with improved activity on OMO bills. How much of appetite can we expect today?
Well, there's a lot of appetite in that space, but the constraint we have is the supply constraint. We've not seen a lot of fixed income assets available on sale. Rates are currently at lows at 5%, and then most investors are on the buy side, so we've seen a lot of pressure there. However, we might see a little respite with the PMA auction today, where we expect the PMO to come and take up what we have in the system.
Fixed income dealer at GT Bank, Chioma Udu, thanks for speaking with us on the program. And just before we go, let's go over crude oil prices again. They're actually down today. That's over revived concerns about how quickly fuel demand will recover, even as the coronavirus lockdowns begin to ease in many countries. And while the U.S.-China tensions, of course, continue to add to negative sentiment, Brent crude futures fell 1.69% in early trade to $35.56 a barrel, and the U.S. crude futures were down 1.6% at $33.83 a barrel. OPEC Plus members cutting their output by nearly 10 million barrels per day in May to June, and that's to buttress prices as measures to rein in on the coronavirus pandemic have slashed fuel demand. Of course, before we saw these numbers coming from the crude oil market, the International Energy Agency had also warned yesterday that the coronavirus pandemic has paved the way for the largest decline of global energy investment in history, with spending set to plummet in every major sector this year. In its annual World Energy Investment Report, the IEA says the unparalleled decline in worldwide energy investment had been staggering in both its scale and swiftness. It warns the economic impact of the public health crisis could have serious implications for energy security and clean energy transitions. The IEA says the slowdown in spending on key clean energy technologies also risks undermining the much-needed transition to more resilient and sustainable energy systems. And with that, we end today's program. Thank you for watching. I am BC Adebayo.